beautiful Thursday morning right here in Lagos, Nigeria. Good evening, good morning. Wherever in the world you're watching from, it's a Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's take a look at what's in the news. The Senate has confirmed President Muhammadu Buhari's 4 nominees as executive commissioners of the Nigerian Upstream Petroleum Regulatory Commission. And this is coming a few weeks after the president, written communication, sought the Senate's confirmation of the executive commissioners for the oil sector regulator. The nominees confirmed include Dr. Nuhu Habib, Dr. Kelechi Onyekachi, and Captain Tolanga Roland, John and Mr. Jide Adeola. The confirmation followed the consideration of a report of the Committee on Petroleum Resources at the plenary on Wednesday. And a total of 135.4 billion naira has been recorded as revenue income by the Nigeria Customs Service Tinkan Island Command, an improvement of 22.7 billion naira for the first quarter of the year 2022. This represents a 22.8% increase for the same period under review in 2021. Reading the statistics that include those of export tonnage and the new Comptroller of the Command, Adekule Oloyede, listed some of the seizures made from traders with false declarations to include 145 kilograms of Indian hemp, 2 Toyota Corolla vehicles, 206,000 pieces of machetes declared as tools, 640 bales of used clothes, and 236,000 pieces of used shoes, and 1.6 million pieces of chloroquine injections, and some other contraband. And after the break, we drill down on Afrinvest Brewery sector report, a performance in a constrained market. That's in a moment. Do stay with us. Back now to our first conversation. Yesterday, Afrinvest Consulting Limited published its brewery sector update for 2021 titled Potential in a Constrained Market. According to the report, the Nigerian brewery industry revenue, proxied by revenue of Nigerian Breweries, PLC, Guinness Nigeria and International Breweries PLC rose by 34.9% year-on-year to 780 billion naira, despite the myriad of challenges in the business environment. Well, let's get more now with Damilaria Shimiyu, macro strategist with Afrinvest Consulting Limited, join us on the show this morning. Great to have you. Good morning.
Good morning. Thanks for having me on the show.
Nice. Well, how would you rate the general performance, of the Nigerian brewery industry in 2021?
Yeah, thank you. So looking at the business environment in Nigeria, as well as the constraints that consumers have been facing in terms of high inflation, which has continued to pressure their wallets, you quite agree with me that the performance of the industry sector in 2021 is quite appreciable, is commendable in the fact that revenue grew by 34.9%. I mean, for the proxy brewers, the 3 brewers that we use as proxy for the industry, Nigerian Breweries, Guinness, and International Breweries. And it is also quite interesting to note that the revenue jump last year is the highest in the decade at 34.9%. Another interesting thing to also note is the fact that last 2021 performance happens to be the first time the industry revenue will increase or grow in real time since 2018. And also the last time that the 3 brewers recorded growth in their revenue was even in 2017. So 2018 is actually a peculiar year because that was the year AB InBev, the parent company of International Breweries, completed a major acquisition transaction with Parbod and Interfact. So basically, the growth we saw in the revenue of Brewery in 2018 was mostly driven by that, because by that development, the revenue of International Breweries more than doubled. But if you look at other players separately in that 2018, revenue was actually down. So the last time all players in the industry had their revenue increase was actually 2017. So this is the first time all industry players have their revenue increase since 2017. Nigerian Breweries grew revenue last year by 29%. Guinness being the fastest at 53%, while International Breweries did 3.3%. So it's commendable that despite the tough business environment from both the supply and the demand end, brewers were able to improve the volume through product innovation, as well as a modest price increase. But last year, the brewers had to come out of their shell to make price adjustments, because for many years they've been struggling to pass down the high cost of operation onto consumers in that they've kept prices unchanged. But last year we saw some modest price increases on some strategic brand, which also helped the performance. But by and large, we should commend the brewers because they were able to improve on their sales strategy, and all the players were able to grow their revenue in double digits.
Quite interesting, but can you see them sustaining this performance?
Yeah, so Nigerian brewers have developed a very thick skin for the challenges in the market. So there are a lot of challenges that are actually beyond their control. We have, which are termed as external factors. There's a problem of power there, which is continue to weigh on their production. Many of them rely solely on diesel to power their production process. There's problem of logistics for the commodities they import. There's a problem of multiple tax. So when I was talking the other time, I said 2018 is a peculiar year in that the last time these brewers all had increases in their revenue was 2017. Now, the increase in revenue in 2018 was just because of the merger of international breweries. So in 2018, the federal government replaced the ad valorem tax on alcohol, spirit, and spirit drink and wine, of 20 kobo per CL with a gradual scale up of excise charge on those commodities, which as of last year, excise charge per liter on alcohol was 40 kobo, on spirit was 1 naira 50 kobo per CL, on wine was 2 naira. So invariably, that policy alone drove an average of 20% increase in cost of production per unit of these commodities. And interestingly, alcoholic products account for more than 70% of revenue of these brewers. So it was a major pressure point that these guys had to deal with. But even with this pressure point, and also with the addition of the value-added tax, increase in value-added tax in 2020 to 7.5, the brewers were able to improve their top line in terms by improving their marketing strategy, by also coming up with a lot of product innovation to meet consumer tastes, because they're in a very sensitive industry. The commodity they sell is actually is classified as consumer discretionary. So consumers are very sensitive, and the brewers have demonstrated the capacity to be able to move in line with consumers' changing taste and offer them what they want at the best price possible. So given their resilience over the years, I think the brewers will do everything within their reach in terms of product innovation, in terms of aggressive marketing, in terms of repackaging products to meeting consumer demand, to sustain this positive performance. Though we don't expect the performance in 2020 to be as strong as 2021, because 2021, the price was actually coming from a very low base in 2020. Industry revenue declined by 1.5% in 2020 due to lockdown measures that was taken in major states like Lagos, Abuja, Port Harcourt at the peak of the pandemic. But following the reopening of the economy in Q4, so brewers are able to improve on their sales. And we also observed that brewers also devised new means of reaching their consumers, even in the comfort of their home. They also partner with a lot of online stores to deliver their products. So we think brewers will continue to innovate ways to get their products to final consumers and deliver good value. So yes, we see them as sustaining business despite all the pressures.
Right, and we've seen most of them, come up with new flavors, to attract new customers. But looking at the theme of the report, potential in a constrained market, can you shed more light on the potential of the sector, with constraints to optimizing it and how to unlock that value?
So looking at the Nigerian market, right, as of 2019, when the NBS last released the demographic data on Nigeria, we have more than 206 million population in Nigeria. And if we pick 21 years as the least, these brewers produce both aqua and non-alcoholic drinks, so we need to establish that. But even if we're looking at their product as strictly alcoholic commodity, we have more than 40% of Nigerians in the beer consuming, a legally acceptable beer consuming age of 21 and above. So which gives us a market size of above 100 million in Nigeria. So meaning that in terms of potential market size, the Nigeria market for brewers is bigger than the combined of other West African countries. And if you also look at it in terms of Nigeria's GDP, Nigeria happens to be the #1 economy in Africa in terms of GDP, at about $514 billion according to the IMF. So these are figures and numbers that provide a compelling case for brewers to want to play in this kind of market. But the constraint there is that producers are unable to optimize this potential of a large market, optimize the potential of an economy which is the biggest in Africa, in that there are both supply and demand side challenges. I mean, supply side challenges ranging from FX problem. I mean, we all can attest to the pressure point on our exchange rates in the last 5 years. Exchange rate has more than devalued by 35%. So these do significantly affect Brewery because they are exposed to a lot of importation. You have problem of power, like I already mentioned. You have problem of logistics. And also there are problem of multiple taxation. I talked about the excise charge that the FG began in 2018, which replaced the ad tax, which added on average about 20% the cost of per bottle of beer products. And also we have other challenges, from the demand side. Consumers' wallets remains pressured due to elevated inflation. And there is also stiff competition in the industry, both from former industry players as well as unregulated cheaper alternatives, which is contending the low-end market segment with this major brewer. So basically, those are the constraints that has made it difficult for brewers in Nigeria to fully optimize this large market size, because it's quite interesting that South Africa, a population of about 60 million, has a potential market size of about 32 million, which is less than 1/3 of the potential size of the Nigerian market. Whereas brewers in South Africa are doing a much stronger number in terms of revenue and profitability relative to Nigeria market. So these are the constraints that brewers are facing in a market that has a potential to deliver optimally for them.
In the sugar tax and ban on alcohol in sachets and small volume PET bottles, but what does the future hold for brewers' revenue performance in Nigeria?
Yeah, so speaking to the sugar tax first, so if you look at this sugar tax impact on brewers' cost, it looks a bit very tiny, because a sugar tax of 10 naira per liter means that you have to take about 3 canned bottles of a non-alcoholic drink to pay an extra cost of 10 naira. So invariably, the sugar tax actually does bring in about 1.4% to average cost of producing non-alcoholic beverage. But given the fact that there are already pressure point on the cost line of brewers, I mentioned that the excise charge on alcohol is adding about 20% to the cost of producing every bottle that you see. And also there is an increase in value-added tax. So if you combine the 1.4 that is coming from the sugar tax, it means that the cost line of brewers will be pressured. And I can tell you that last year, cost of production or cost of sales of brewers last year rose by about 33%, nearly offsetting the industry cost of sales rising by 33.3%, nearly offsetting the gains in terms of the rising revenue. So when a policy like the new sugar tax, or what the government tag as same tax, adds to the cost pressure, you agree with me that it will reduce the margins of brewer, and again, they may not be able to fully pass all this cost to consumer. Though we've seen some price adjustment recently, but many of that have been done good. So we think that the new sugar tax add to the cost line, had pressure on the cost line, reduce margin, and the ban on sachet alcohol, right, will take away the low-end market segment from the regulated brewers, because this is a market that is serving mostly low-end market, estimated to be about 42 million. So the ban on them will affect about 5 to 10% profit of brewers, though we expect that brewers will continue to be aggressive in their marketing and to deliver quality products to bring some of the low-end market, low-end market to the economy of premium stage of your product. But this will actually affect the revenue slightly in the coming years.
Yeah, those sachets were quite abused, by a lot of people. Well, you estimated the capacity utilization of the Nigerian brewery industry at 43.1% in 2021 compared to a 60% uptake for the brewery industry in South Africa. What would you suggest industry players, to do to improve capacity utilization?
Yeah, so given the nature of the business, it is the product basically is more of consumer discretionary, and the performance of the industry responds strictly to consumers' willingness to purchase. So I think what brewers just need to do is to improve investment in research and development to be able to provide the products in a way that will suit consumer demand. We saw some last year. We saw Guinness rolling out his Guinness Smooth Extra, in can. All these are just to deliver what consumer wants. So long brewers are trying, because that's what they can control. They can't control inflation. They can't control the impact of exchange rate on them, and they can also not control what consumer want. But you can study consumer taste and produce towards meeting their taste. So long brewers continue to invest in research and development and to meeting consumer taste. I believe that it will help their performance going forward.
Right. I guess the brewers have, quite a lot, to do there to, continue and maintain this upsurge in revenue. Thank you so much, Damilare Ashimi, macro strategist, Afrinvest Consulting Limited. It was great having you on the show today.
Thanks for having me.
All right, now, so commodities market update is next after the break. Do stay with us. This is Business Morning. All right, now for commodities market update, we see oil prices fell after rising sharply in the first half of the week. Brent futures was down 45 cents this morning to $108 a barrel, while U.S. West Texas Intermediate crude was off 69 cents and trading at $103.56 a barrel this morning. Well, we have maybe right here, analyst, financial derivatives company, joining us on the program. Great to see you again.
Thank you. Good morning.
Maybe good morning. Well, these price movements, in the oil market, today is up, tomorrow it's down. But what are you seeing?
Basically, it's still surrounding issues with the Russia-Ukraine war. So, at first there were hopes that there would be some level of conversation between Russia and Ukraine, peace talks, and that raised some sentiments in the market. Oil prices softened a little bit, but now that it looks like the conversation is, headed for a deadlock, and there are negative sentiments now towards the entire war because it's almost looking like things are escalating, and the war is lasting longer than anyone would have anticipated. So sanctions pouring in here and there, and for some reason it looks like the Russian economy is shrugging it off because we see that the Russian ruble is, gaining some momentum. They're able to sell oil in ruble. They're, just making a lot of things happen, and it looks like Russia is somewhat shrugging off the impact of these sanctions and preparing itself for a lot more. So, but when we're looking at it as, okay, what is going on in the oil market and how this is going to continue over time, we're seeing that, okay, the sanctions are definitely having some market sentiment attached to it. We're also seeing that the impact, the fact that nothing's so much is, happening with Russian oil. Russia is still quite optimistic about its exports. That is also, putting some level of sentiments as well in the market, and that's why we're seeing these swings in oil price, especially with the fact that the IEA, coupled with OPEC, are planning to, put more oil in the market. So everything put together is, causing this swing in oil prices.
And we're seeing the IEA say that at some point these sanctions will be felt in Russia. Maybe
exactly, and that's exactly why I was saying that it's it looks like, Russia isn't taking, it's taking a hit, but it's, it's shrugging it off. It's able to withstand some of the hit. But I mean, we just have to we just have to keep monitoring the market and keep our fingers crossed that this entire war just, comes to an end anytime soon, because we're looking at May. Like, nobody wants the war to continue till then, but we're hearing the IEA say something about May. China is saying something about May. Month of May, let's just...
All eyes on the month of May
exactly,
at this point.
all eyes on the month of May.
And obviously, inflation, we're seeing U.S. inflation hit about a 40-year high. We've seen UK 30, and Ghana here hitting a 12-year high. And, I saw some chatter in the market yesterday.
Yeah.
We saw kind of recovery, with most international markets. They're saying U.S. inflation might be peaking at this point, and we're seeing, investors actually happy about that. What do you think?
So the truth is that when it comes to what is happening in the global economy and how it affects several economies that are importing, strategic and important commodities like oil and LNG, it will definitely continue to have an impact on their revenue and on inflation. Why? Because they're importing at a more expensive rate. So it's just typical supply and demand, issues or dynamics that are playing here. You spend more, you also have to pay more. So that's exactly what is going on. For the UK, for the US, for EU countries as well, all of this is energy-induced. So this is an energy-induced inflation. And the longer the war lasts, the more we're going to continue to see this. And for oil-producing countries that should be able to benefit from this and also somewhat hedge against the inflationary pressures. We're also seeing them, experience this increase in inflation. And that's just simply because they still import. A very simple case, let's bring it home, right Nigeria, here. Right here. So not to paint a bad scenario, but the truth is the more oil prices, remain bullish. And I'm saying bullish because we've seen that oil prices have just, continued to linger around the $100 per barrel benchmark. It could fall today to about 90, 99, 98, 97, but before you know it, there's something pushing it back up to $100 per barrel. So we could use that as somewhat of an estimate to say, okay, all prices could remain at this particular benchmark for the next, coming weeks, maybe like a week or two. And that alone has a significant impact on the Nigerian economy. When we look at how this is going to continue to affect inflation, look at how it's going to continue to affect the price of imported petroleum commodities, PMS, diesel, and then we also look at the LNG aspect. We look at LPG, we look at cooking gas, and we look at grains, we look at wheat, and we look at the impact it's having on flour, bread, all that commodity. So as long as the war continues, it's going to continue to have, it will keep having this inflationary impact on all importing countries. Right,
and we're seeing, household incomes, being squeezed at this time,
exactly.
We have Easter, celebration, actually coming, and we're having, Ramadan,
festival as well.
Festival happening. So this all will play into price.
Of course, of course. So if we look at what is happening in, let's talk about what's happening in Senegal first. So, and like I said, several countries that import are, experiencing this surge or this increase in inflation. So Senegal, for example, there was an article that came out on Reuters saying that the Ramadan is not looking as, happy, in Senegal, and that's because things are expensive. So on average, food prices have increased in West Africa between 20 to 30% as a result of, the current happenings with the Russian-Ukraine war. But we could also backdate it as well to issues surrounding insecurity, because Nigeria, amongst other countries surrounding the Sahel or the Sahel region, have been affected by insecurity. And this is also affecting their ability to produce enough to meet their subsistence before even even thinking about exporting or, you know, increasing supplies so much so that, you know, they're able to export and all. So it's a huge chain that is happening. For Nigeria, we see that insecurity is also a major issue. And remembering that the issues surrounding Nigeria's inflation are, you know, cost push. So apart from the fact that food prices are rising, people are not demanding so much. So we could see that that's one of the reasons why. Yes, because your income level is not increasing. For example, if you were earning 200,000 naira in 2019 when inflation was 11.98%, and now you're still earning 200,000 naira when when inflation is about 15.7%, your income, as at your real income, what you could go to the market to buy in 2019 with 200,000 naira, the real value was just about 176,000 naira. Now moving to today, it's 168,000 naira. Remember, your rent has increased. Fuel has increased. If you're staying in a serviced apartment, you know, probably you're an island big girl or big boy or big family, your diesel cost has increased. Transport as well has increased. Cost of food has increased. And remember that every business, for supermarkets, for even smaller businesses you find along the road, these people run on either fuel or diesel, apart from the little kiosk that you see that probably will just maintain itself. But if we look at the fact that a lot of people now do buy from supermarkets or even the open market, these people either run on petrol or diesel, and they affect it in their prices, you know. So everything is, there's a ripple effect, there's a chain reaction, and that would, the unfortunate thing is, it's the consumers that, you know, are seated at the bottom of the pyramid and will continue to, you know, experience this in their income levels, in their cost of living, in their standard of living. And then when we look at it on a national level, you know, we have the national income identity, Y is equals to C plus I plus G. And with the positive sign, it means that there's a direct link, there's a positive relationship between these factors: consumption, investment, government expenditure on the output level of the economy. And anyone declining also has an impact on national income. So if consumption levels are strained significantly, it does have an impact on the national income or on output levels. So it's just going to keep, you know, affecting the Nigerian economy. And remember, government revenue is not increasing so much so that they could spend, you know, enough in the economy to boost output levels, because expenditure is recurrent. We're not seeing so much of capital expenditure coming into place. And we look at the investment angle, investors are wary, investors are skeptical. And remember that interest rates in the global economy is increasing. So if anything, investors are eyeing and, you know, moving funds towards other advanced economies and other emerging markets that have taken the big step or the bold step to increase interest rates to retain domestic investors and attract foreign investors. So clearly, on all counts, there's an issue. It'll be interesting to see if
you know, because of this talk about, you know, U.S. inflation actually peaking. It'll be interesting to see, you know, how all of that play out. But looking at the goodies here, I'm seeing that the import cover is up to about 9 months.
Yeah.
Because last time I said it was down.
Yeah, so, you know, the external reserves have just been creeping up a little bit. And one of the reasons why we think that is happening is because of the borrowings that the government is taking up. And not only that, we're seeing some marginal impact on government revenue from the higher oil prices, although it's not significant enough to support the economy or keep the naira stable at the parallel market. We're still seeing a lot of speculative activities go on the parallel market because forex supply at the official window is not substantial to meet the current level of demand. And remember, we're heading into summer, so demand for forex is going to, you know, keep increasing. And if issues in the advanced economies continue, we could also experience a decline in capital inflows into the country, remittance inflows, you know, and all of that would have an impact on the forex position of the country, and then have an impact on external reserves, and then also have an impact on the exchange rate.
Quite a domino effect there. But, you know, what are we seeing for agricultural commodities
Yeah, so like I mentioned earlier, we're seeing that prices are not as high as not as high, but they're picking up again, and that's because like the Ramadan fasting effect. So prices are increasing as well, and remember we're also heading towards Easter.
Oh, yes.
Easter is very close by, and there is the usual frenzy around festive periods like this where commodity prices usually increase. So we're seeing that happen, especially for fruits and major staples like rice, bread. So we're seeing that happen in the domestic commodities market. The truth is that, like I mentioned earlier, we could see inflation rise in the month of March and also
expecting
April.
That data,
the report exactly from the NBS later today. Yeah.
All right, be interesting to see how that plays out. Thank you so much, Dumebi, analyst, financial derivatives company. Always great having you.
Thank you.
All right, now let's take a moment now. Welcome back. All right, let's take a look at what's happening in the fixed income market. We have Ini right there with the information. Great to have you, Ini.
Good to be here, Laddie. Good morning. Well, I have to tell you, it's been an exciting time reporting the equities this week because we've been doing positive, and the bull is just having a field day.
Yeah, I know how you like the positives, Ini.
Yeah, who doesn't like positive? So let's find out the details from yesterday's trading in the equities market. The all-share index was up 0.34%. Equities cap doing very well at 25.536 trillion naira. And then when we look at the activities chart, even though the deal was down, that doesn't say much because we see that it was higher volume. And the value really caught my attention yesterday because this is 117% higher than it was the day before. So a lot of money got into the equities market yesterday. Nigeria, a good time for investors. Very soon now we'll see profit taking, and then you can expect that it will be going back. The sectors, we have GT Co here, Zenith Bank, a lot of tier 1 lenders doing a lot of trading. The investors have their eyes on that. And so we see the counter was up over 0.5%, 0.56. Consumer goods, we have Nigerian Breweries yesterday. It drove this sector, even though it wasn't so marginal, but Nigerian Breweries did a whole lot of good there. Industrial goods was unchanged. That's very close to the tip. And then insurance was the only one in the red yesterday. Oil and gas close to 0.03, but at least it made it to the green segment. Well, let's go to the fixed income market now. And this is just like opposite of what's going on in the equities market, kind of quiet. We talked about the issue of liquidity in the market, pressure on liquidity, and it's really showing in the market. But we're expecting some liquidity next month. We do hope that that will change what we have there. So we see there were 8 deals in the federal government bond, on the federal government bonds yesterday, worth 2.69 billion naira. And the December 2031, April 2031, and 2023, sorry, that's next year, and then 21st of January 2040. And the NTB, just 2 deals, but I think we have Caleb Alimi now, he's a fixed income dealer with the FSDH, joining us to help us understand more what's going on in the fixed income space. Hello, Caleb, good morning.
Good morning, Ini. Thank you for having me.
Great, Caleb. So it's like the equities is taking the shine off what's going on in the fixed income market. What's really happening there?
You know, like you rightly mentioned, you talked about low system liquidity, which is affecting the performance of NTB or, fixed income generally. April is generally a low liquidity month in terms of money supply into that market. So that's what you're seeing play out at the secondary market of the fixed income. However, the big news will be yesterday's primary auction yesterday, and we see investors are consistently now demanding for higher returns in that space. We could tell from the range of bids that we saw on the 1-year paper from the last auction, the highest bid 7.99%, but this time the highest bid was around 8.75%. So we see that investors are demanding higher on their fixed income instruments. We saw that the 1-year paper 15 basis points higher from the last auction. Last auction, the stock was 4.4%. At this auction, it was 4.6%. And then we expect that, what we see is investors are largely keeping their gunpowder dry in expectations of higher interest rates. And so we can see that playing out in the market already. That's why you see that.
All right, and we're expecting the PMA today. What are the expectations? What are investors saying? What are you traders? What are you doing about it? What are your expectations from the PMA?
The PMA happened yesterday. That was what I was talking about. The PMA happened yesterday.
Oh, okay. I must have missed that. So how did that go?
Well, that went higher. Interest rates are higher from last stop rates. We could see interest rates inch up the 1-year paper by 15 basis points more than the last one. We could also see the range of bids. The investors are demanding higher interest rates. At the last auction, the highest bid was around 8%, but at this auction, it's about 8.75%. So investors are keeping their gunpowder dry, and they're anticipating higher interest rates in the market, and that is why you see little activity in the secondary market and more activity in the primary auction.
So the expectations of some liquidity heading towards the market next month, where are we expecting this from, and what possible impact could it have?
So what would happen between now and next month is that interest rates will continue to trend higher. Significant flows towards the end of the month from the FAC allocation, the statutory allocations, when they come in towards the end of the month, and other coupon payments that come in the final week of the month. That is when we'll see a bit of interest rates maybe moderate. But for now, between now and the end of the month, interest rates are expected to continue to trend higher.
Yeah, and then next month is also MPC, so I guess there'll also be expectations and plans towards what could be the outcome, which is a likely hike in interest rate.
Well, definitely. I mean, the MPC, anyway, we'll be looking forward to that. Some people expect the MPC to follow suit from what other global central banks are doing, hiking rates across. But our case is a little bit peculiar, but we'll look forward to that. I don't want to make any calls.
All right, Caleb. Yeah, we're a little bit peculiar. We don't expect to go with what's happening globally. Thank you so much, Caleb Alimi, dealer with FSDH Merchants Bank. Thank you so much for sharing your thoughts with us.
Bye.
So just before I hand over to Ladi, let's see what happened in the CBN. Not a lot there, 9 deals, only worth 11.50 billion naira yesterday. And then in the open market securities, we saw also just 11 deals there, worth 8.15 billion naira. In the unlisted market, it was also a positive trade there, not so quiet like what's going on in the fixed income. The index was up 2.40, and then activities there also trended out, as we see the market cap going right up there. Deals executed yesterday was 19. More than some of those that we see in the fixed income market. And that's it.
Well, a tough time to be, a central banker, because we see, the Central Bank of Nigeria is trying to, maintain, the fragile growth, that, we're having, at this time, instead of hiking rates like other central bankers. It's a tough decision
for them,
it's
because,
a tough call.
Yeah, they've always been focused on encouraging the fragile growth in the economy, exactly. But now they have to deal with inflation, and so they'll be pushed either to increase interest rates or not.
Thank you so much, Ini.
Thanks, Ladi.
All right, now we'll take a break. When we come back, we head to London. That's in a moment. Do stay with us. All right, now let's head on to London. We have Juliana standing by right there. Good to have you, Juliana. Good morning. Well, I see holidaymakers trying to get away for the Easter weekend. They've been warned, likely to face disruptions, whether you're traveling by air, rail, road, or sea. Quite interesting.
Yes, quite interesting, but misery for British families who are desperate to get away for the Easter bank holiday weekend. I think the Easter bank holiday weekend in the UK does start the summer vacation route, and lots of people have been struggling over the past couple of weeks. We know that hundreds upon hundreds of flights have been cancelled at Heathrow and Gatwick Airport, including today. Apparently, there are queues of up to 9 hours hours. One gentleman speaking to British media this morning was absolutely furious that him and his family, after saving for almost a year, got to the airport 3 hours before their plane was due to take off, but they were late getting on the flight, so they missed that. And as you said, these issues are not just in the airports, there are also issues by ferry. Lots of Brits do like to go between Dover and Calais, but of course, because of the scandal engulfing P&O ferries at the moment, which means they're unable to sail, does mean that there is disruption. And typically in the UK, we do know that over this Easter bank holiday weekend, so many people that live in London try to go back home to see some of their family members who don't live in the capital. So there will be big gridlocks on the road, probably not as gridlocked as we would see in Lagos, but certainly there are issues. So the Transport Secretary, Grant Shapps, has been speaking on BBC Radio 4 this morning, just advising people to leave extra early, probably a day before if you want to get on a flight, and yes, just to be cautious.
Quite a tough time, you know, for holiday makers at this point. But, you know, I see research has found, you know, private rents in Britain are rising at a record rate, jumping about 14% in a year in London and by more than 19% in hotspots such as Manchester. I guess it's more pressure on already strained household budgets.
Absolutely. It's tough. It's tough in London at the moment. Not all that glitters is gold. And according to Rightmove, which is a property listing website, for an average property, I take it they're probably talking about 2 bedrooms, you would pay in London over £2,000. That's equivalent to about 1.2 million naira, laddie. That's every month. That's the standard average rate of rent that you'd pay if you want to live in the capital. It used to be much cheaper to live outside London, but as you said, prices for rental properties are surging. So in hotspots, Manchester, Swansea, other areas such as Birmingham, you're looking at paying about £1,100. And if you go back a year ago, it was much cheaper than that. So there are concerns. A lot of people who are renting at the moment would typically be the kind of people that would buy. But as we've discussed extensively on this programme, we know that the price for an average property is about 15% higher than it was pre-pandemic. So this is all part of the year of the squeeze. Really difficult here in the UK at the moment.
Quite interesting. The year of the squeeze. Well, it's playing out to be that. Thank you so much, Juliana, and we'll see you at 1:30 for more updates. Thank you so much. All right, now let's take a look at other markets. We're seeing, let's take a look at the Fear Greed Index for the crypto space. They're talking about sentiment in the market, how traders are feeling right now. We see it's at 28 points. That's fear. It was extreme fear yesterday, but now it's back to fear at this point, showing that traders are getting more bullish in the market, but it's still quite scary right now. But looking at the market cap, we're seeing $1.91 trillion. That's up about 2.16%. Volume traded in the total crypto space, that's down about 12.93%. Bitcoin dominance sitting at 40.97%. And we see Bitcoin there getting that bounce from the 39K level. It's now trading at $41,223. We're seeing most global markets actually up yesterday, talking about U.S. inflation actually peaking at this point. There's a chatter going on, and we see investors actually reacting to that. We also see the price of Bitcoin actually jumping with NASDAQ, correlated to the NASDAQ in the U.S. Price of Ethereum now $3,106 this morning. That's up by 1.69%. Volume traded $15.73 billion. Let's bring in Bjorn Martens right there, CEO Passive Income Token. Hello, Bjorn. Good morning.
Good morning, Larry. How are you doing?
I'm good. Great to have you as always, Bjorn. So, you know, a lot going on in the metaverse. We're seeing Meta, that's formerly Facebook, planning to take nearly 50% cut on virtual asset sales in its metaverse. That's a tough one. 50%, that's
Very
a lot
tough.
of money.
Yeah, a lot of money. Yeah, you already seen a lot of people are outrageous on the internet about it. You have seen messages going around, hate Facebook, a lot of hate messages towards Facebook. Mark Zuckerberg came forward that mostly is going to be used to pay for the people creating these assets. One reason why I can say why he needs to charge 50% fee is beginning the first time in a lifetime, honestly, since we all have games, are going to be able to have non-fungible assets in the games that are based on NFT technology. So every single asset is going to be a sole asset in the game. So you're not going to have 10,000 of the same gun for everybody. No, you're going to have one gun for one person. So I can imagine that these fees need to go to the creator, and it can take up months for them to just create one asset for inside of a game.
That's quite interesting. But, you know, I'm wondering, what are the options do you have, you know, if you're trying to actually, you know, mint these tokens and actually sell, you know, if Meta, you know, is too expensive, what are the options you have?
I'm curious if they're going to integrate it in a decentralized way so we can use OpenSea to trade them or any other NFT marketplaces based on Ethereum or Polygon, for example, as where they are going to be operating on at first. But that will be the question at first. I don't even sure if they're going to be able to trade secondarily. We have seen similar things on Steam. You have the asset store. There where people can trade their secondary guns, where they have pimped up, completely made it gold or something. People love them. They won a lot of games with their gun, so they got to earn a lot of money. Also, again, there are a lot of copies of that one, but they already go over like for $1,000 on the market. Well, let's see how Mark Zuckerberg is going to put it together, and if we're even going to be able to trade these things, or only for in-game use.
Quite interesting. Well, we'll be watching, you know, the next move. Maybe they're going to, you know, back down, you know, with the pressure coming from the crypto community at this point. All right, Bjorn, it's always good to talk to you. All right, Bjorn, always great. Have a good day, too. All right, now let's look at the top alts by market cap. We're seeing BNB there. That's $421. That's up about 0.49% this morning. We're seeing mostly green on that counter as Bitcoin is going up. We see the altcoins are always following right behind. Cardano, 97 cents. That's up about 1.36%. We see Solana there, $106, up 2.27%. We see XRP trying to get back to that 80-cent position, up 2.66%. Let's look at the top gainers this morning. We have audio there. That's up about 21.43%. We're seeing double-digit gains, you know, from the losses we saw last Friday, double-digit losses actually, but we're seeing most of these altcoins actually get back some of those losses there. Rune is up 18.21%, and we see Glimmer token there up 14.25%. Looking at the top 5 losers, it's mostly lean losses we're seeing, but Sheep there returning some of those gains, had that surge after being listed on Robinhood's side, but having a pullback this morning, down 3.27%. All right, that's it for the crypto space. That's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated for more updates in the world of business. Thank you for watching. I'm Laddie Williams. Bye-bye.